that particular business, Resas, in Turkey, we own about a third of that business. And I really think of it like a family business. My goal with that business is to own it forever. So as long as the family that owns the business and runs the business, as long as they maintain their ownership and they are the managers running the business, we don't want to make any changes. Once you have ownership of a truly wonderful business that you acquired at a wonderful price, you're done.
I've had the privilege, I should say, of interviewing you a lot of times, and it's always been a lot of fun. And I've had this nasty habit of always interviewing them and then publishing this episode on the Berkshire Weekend, and quite a few people have gotten a wind of that. And so different people want to ask me different questions, and they're usually always related to investing. And one of the wonderful things about getting the opportunity to interview you is that I'll go through all of your interviews over the past year. So on your YouTube channel, there might be another 30 videos, whatever, over the past year. And I gave myself this challenge to, whenever you go to a concert and the artist wants to play his newest songs, but everyone else wants him to play greatest hits, so I'm, which is terrible, right? So I'm going to be that terrible person who's going to say, let's hear something from the new album. So in one of those wonderful interviews that you did, someone said to me, or someone said that he was on a train ride with you. And he said, he met you in Omaha, then for whatever reason, he sat next to you on a train ride, and it was completely confidential. So I wanted to use that premise and ask you some questions that are super selfish and just ask you something about life. And perhaps we get to speak about investing at some point in time, who knows? But I wanted to start out talking to you about life. And sorry, I've been rambling for the first 2 minutes, Manya, so I'll get right to it here. So the first question is that in '84, you sold a small stake in your business, TransTech, and it was like $1 million is after tax, and you turned that money into $13 million in 5 years or whatnot. And so you became financially independent. And I think I heard you say it was age 33. So yeah, very young, you became financially independent. How did that change your relationships, if at all?
I don't think there was any change in the relationships I can think of. I mean, I think that my friends were the friends, and the family was pretty similar and same. I think the only change I can think of is that I could pursue a more independent path, and I started to think about that. Like Charlie would say, his main driver for the wealth was independence. And the money freed me up to really think about how I wanted to spend my time and what I wanted to do, etc. So, for example, one of the things I did at that time was that I fired myself from my company, the IT services company. I was not enjoying running it. And basically, looked for and then hired a CEO to run it. And so basically, I was making changes which were focused on what would give me greatest satisfaction and joy. And I knew that I wanted to spend more time with investing, and I wasn't even focused much at that time on managing other people's money. At that time, my focus was just manage my own money, and I felt like there was a nice enough pot that I thought I could grow over time and would allow me to lead the life I wanted to lead. So the relationships didn't change that much. Just the way I was spending my time on a day-to-day basis went through a lot of change.
Is it stressful for you by any means to invest other people's money? I should probably have made a full disclaimer that I'm in the privileged position of having invested with you, Manya. So I don't know if I should even ask you this question. But does it add stress to your life to manage money for other people? Because you are in a very privileged financial position now, and so you could also just invest your own money now and perhaps not have that stress. And so how do you think about that?
I've actually never found it stressful. I mean, of course, there are times, like, for example, during the financial crisis, we were down 65, 67% from the peak. I mean, the index was down about 40%. So there was a big drop. We had about 600 million under management before the financial crisis, and it was down to 200 million. What bothered me, and I couldn't really do much about it at that time, was some of the people who came in at the peak and then redeemed at the bottom. And I really couldn't do much about that. And that was unfortunate because I had no chance to make it back for them. But that was a small minority. Most of the money stayed. And so I think the gyrations, to the extent that people start, making decisions which are counter to their what I think might be their best long-term interests, that's unfortunate. I don't feel stressed about it, but I'm a little sad about it. Can't do much about it. But other than that, I've never really found managing money to be a stressful situation at all. In fact, what has happened is that it has led to some wonderful new friendships, wonderful new relationships. And so I've been able to interact with folks that I would not have been able to interact with. And also, it's made it easier to engage with the businesses that we invest in. They pay a little bit more attention because we've got some size. And so that is a little bit of an advantage. So I think overall, I would say the pluses outweigh the minus.
Happy to hear that, I should say. So I know that you haven't been shy of telling students not to use Excel. But you also mentioned that during the financial crisis, you had to climb up from that hole and use Excel because you could, in your Excel sheet, you could see what was the intrinsic value, and then you could, look at the tickers, and it would tell you something very different. Have you fired up Excel since the great financial crisis?
Actually, I still keep that spreadsheet. I still keep the spreadsheet because I think it's useful to understand. I mean, we get quoted values on the businesses that we own, but it's also useful to know what I think might be the underlying value of the businesses that we own. And so I still have a very similar spreadsheet, and I do update it periodically. It doesn't take much time. We might have one or two new ideas in a year, and so there's not much movement. But one of the reasons why that was helpful is that we had made an investment a few years back in this Turkish company where there was such a big gap between price and value that it was just kind of useful to understand what the whole thing is worth. And I also needed to, because we have so much concentration in one of the funds, I needed to educate our investors that, hey, listen, if you sell or exit, please understand what you're selling, right? I mean, you're selling based on market value, but intrinsic value may be much different from that. So I think in the financial crisis, the rope was important to pull me out of a deep well. And now I think it's not really a well I'm in, but it's really a beacon. It's kind of like a North Star, which tells me how I should think about it. And like, for example, that particular business, Resas, in Turkey, we own about a third of that business. And I really think of it like a family business. So I'm not part of the family that founded that business. I'm not the part of the family that runs that business. But I feel like I'm part of an extended family that has ownership of this business and asset. And I think of it almost like a private position. And my goal with that business is to own it forever. So as long as the family that owns the business and runs the business, as long as they maintain their ownership and they are the managers running the business. We don't want to make any changes. And so that mindset, I think, is important. And I use that mindset. I try to use that mindset in some of our other positions as well, because that's really the name of the game. Is that once you have ownership or partial ownership of a truly wonderful business that you acquired at a wonderful price, you're done. You know, not much to do. Just watch paint dry.
Go to Tokyo and have sushi, like you've been known
Yeah.
to, known to do. The good
Yeah.
things in life. Um, Manish, which period of your life have you been happiest, and why?
I would say I've always been a happy guy in general. I've usually tried to set up my life in a manner that I'm professionally very satisfied. There have been periods in the past when I was professionally unhappy, and those were tough periods. But I would say that the current period is as happy as I can remember any period being. It'd be hard for me to calibrate, but I can clearly think of two or three times in my past that were not great periods where I was out of alignment and I wasn't in a good place. When I look back, and if I look back from the time I was 18, when I started college and so on, and I'm going to be 60 in a few months. In the 42 years, there's just been a few single digit years, maybe two or three single digit years that weren't great. But those were the periods where I made changes and I took the bull by the horn, and it transformed things. So that I haven't had that type of a situation in several decades. It's been great.
Wow, that must be wonderful. And one letter that you refer quite a few times, that's Buffett's 2022 letters, when he talks about those 12 decisions that really improved his track record. So, because we are at this concert and I don't want to play the greatest hits, I'm not going to ask about the best investments decisions. But aside from your decision to sell TransTech, which other decisions have made you the biggest improvement in terms of happiness?
Yeah, that's a great question. Um, when I was, I've only had one employer in my life. It's a company in Chicago called Tell Labs. And basically, I had started with them in R&D and engineering. And after about 2.5 years, I was quite unhappy. We didn't really have great projects, and I didn't have a great manager. So I was going through a lot of confidence issues and, just really, and I was a very young guy at that time, really needed better mentors and better managers. And I made a change at that time where I moved from engineering to marketing. That was a tremendous positive change, really led to a very euphoric period. And then another period, obviously, was when I made the transition from TransTech. So there have only been like two or three of these periods in my life where I was hitting a low point, and the actions I took to get out of that low point led to new highs and led to great highs. And so, one of the reasons why I think the happiness equation has worked as well as it has is because I'm always asking myself the question, are you happy? Are you content? Are you satisfied? What would you like to change? What would you like to do different? And for example, one of the changes I've made in the last few years is I try to kick the tires a lot more uh, on the businesses that we own. So I've been spending more time visiting the plants or the coal mines or the coal terminals or the warehouses, different things related to the different businesses that we own. And I've really enjoyed that. First of all, it's helped me understand those businesses a lot better. But also, I regret that I should have done more of that earlier. I was a lot more of an armchair investor earlier, and that's a comfortable place to be. But you can miss a lot when you're an armchair investor. And so, basically, it really helps you understand business better when you're in the field and you're meeting the different people who are doing different things in the business and so on. So I think that's an area I'm trying to expand in my life. It leads to more travel and things, but there's a huge payoff as well, which is great.
You mentioned the happiness equation just before, and I wanted to talk a bit more about that. So if I say that we have two mental models, so one is you figure out what makes you happy, and then you do more of that, and then you have the other mental model, which is you have some things that makes you unhappy, and then you invert. Which one would you choose, and do you have other mental models in terms of optimizing for happiness?
Well, I don't think it's one or the other. I think you have to do both. One of the things a lot of humans do is they drift through life. So you have a friend, he or she has some shortcomings, and sometimes loyalty overrides rationality, and that can have a negative effect, right? So it's easy to be in a status quo, but I think to really kind of first of all grow as a person and to have a higher degree of happiness and higher degree of satisfaction, you have to take the bull by the horns. So you have to be deliberate in expanding the relationships that are very healthy, reach out to grow them, and de-emphasize the ones which don't get you there, right? And so those types of actions a lot of humans are not willing to take, right? Because loyalties get in the way or other things get in the way. So I'm always trying to do that. I'm trying to uh when I moved to Austin, I started meeting people at my home for Assam tea in the afternoon. Not much, maybe like a couple of times a month. I can only handle so much with humans, so a couple of times a month, I'm happy to step out of my cave and I'd meet someone I hadn't known or met for an hour or so. And I I try to pick them based on possibilities that there was something that was possible there. People reach out to me, they'd like to meet me, etc. And of course, I can't meet all of them, but in some cases, there's something intriguing about the person or the background or something. I say, okay, let's take a flyer and let's meet the person, right? And most of the people I meet that way, they've been wonderful to meet, most of them. It still doesn't result in anything. It's a one and done, right? Because there's just not enough there. And of course, I already have so many relationships and friendships that there isn't that much room to keep, adding an infinite number. I'm much more better with happier with fewer relationships, but deeper relationships. My dad used to say that if you have one good wife and one good friend, there is nothing else you need in life, right? And so that's always the focus. But these afternoons of chai with Pabrai have been really wonderful, and they have led to some new wonderful friendships. It's just a small number. The ratio is small, right? But I'm okay with that. In fact, I actually feel happy when I meet someone and I arrive at the conclusion that we probably will not have a deep friendship here. Because I feel like, okay, we explored something, and that's good. It's good to explore and check one off the list and keep the exploring going.
So I think I heard you on an interview where you talked. Well, the rumors has it that the SMT are very good. That's that's what I'm told.
If you find yourself in Austin, Stig, we will have Assam tea.
I love that, and I am also worried because it leads me into the next question, not about the SMT, but I am a bit worried because you said on that interview that at that point in time, I think it was like 34-ish people who have come to your home, and you said one person, made the cut. And so we've previously also talked about how to live a life of not telling lies. And so I would imagine that more than one of those people who you had in your home might have felt that you were great buddies now. Perhaps you let one pass the filter, but perhaps the other person now felt that you're the best friends. And so let's say another person reached out to you after, and this is not an unsolicited email. This is one person being in your home, getting the best Assam tea, and then saying, "Hey, Mohnish, can I pop by next Tuesday?" How do you say no to that person?
One of the things I learned from Warren is you have to be really good at saying no. And you have to be really direct. So I've always tried to be candid with everyone. One person came recently, and nice person, but also part of it is that, so I should just caveat this, that I may or may not fully understand that person after one meeting, right? So I'm making a judgment call, right? And the the judgment call I'm making is based on Buffett principles. And so when I had lunch with Warren, I told him, I said, Warren, Charlie and you are such fantastic judges of humans. Were you always a great judge of humans, or is this something that you picked up over the years? So he says to me, well, first of all, Charlie is a lot better than me, but I just want to correct you, Mohnish, that I am not a great judge of humans. So he said, if you put me in a cocktail party with 100 people and you gave me 5 or 10 minutes with each person, I could tell you that 3 or 4 people are exceptional and wonderful. And I could also tell you 3 or 4 people are folks that you want to have nothing to do with. And the other 92 or so, I really wouldn't have an opinion on, right? Because it's not enough time to form an opinion. But then he said that the 3 or 4% who aren't great and the 92% which are unknown, he puts them both in the same bucket, which is harsh, but it's what you got to do, right? And so he says that I'll try to have a relationship with the 3 or 4 great people and ignore the rest, right? So that is an unfair system, because in that 92% are probably many good people. It just didn't come through in that short period of time. And that's the same thing with my Assam teas. Though in the 1 hour, I am not going to be able to precisely nail down where everyone stands and what actually are the realities of something that could be a great relationship or not. But just like in investing, there are no called strikes because there are an infinite number of humans on this planet. And because there are an infinite number of future Assam teas, basically you can set a high bar, and there isn't much of a price you pay for not recognizing a great individual. But there is definitely a huge negative price to be paid for letting someone in that may not be the right person to let into the inner circle, if you will. So basically, it's an unfair system. It's a bad system, Stig, but it is the system that Warren uses. And who am I to try to improve on that system? And so basically, what I look for is when I meet somebody, I reflect back after the tea. I say, okay, what do I think and what's going on? The most recent chai with Pabrai I had, that person asked me to come to his place. He lives very close to my home. And he said, I was happy with the Assam tea, but I'm really a fan of Darjeeling tea. And so he says, I make a great cup of Darjeeling tea. And would you come to my home so that we can have Darjeeling tea? And I like the guy, you know. So it's not just one stick, it's more than one. I like the guy. And I said, yeah. So there will be a Darjeeling tea happening, even though I didn't tell him this, but, Darjeeling is not my favorite.
Yeah.
But, it's okay. If the company is good, we can deal with mediocre tea.
Can I go back and then ask, whenever you say that you are a harsh grader, and whenever you say you want to be direct, of course you also want to be kind, but like, do you literally say it was great meeting you, or don't you even say it wasn't great meeting you if it wasn't great meeting, and then just saying,
Well, I've
we just-
enjoyed these meetings. I'm not lying when I'm telling them I'm
Right.
not. I have not enjoyed meeting these people because they go through a lot of filtering process before they show up, and I learn from everyone. So they're wonderful people. But so I'm very direct with them. Like there was a person who came a few days back, and they were interested in going to dinner with my girlfriend and his wife, right? The four of us together.
Mm.
Now that adds more layers of complexity.
Yes.
Okay, because she's going to ask me a bunch of questions: who, what, where, what are we, what are we doing here? What's going on, right? And to me, it was obvious. I didn't even ask her. It was obvious to me that that's not going to be in the cards. And so I just told the person, I'm sorry, things are too busy. We can't do it. All the best. He had a very gracious response. It was fine.
Wonderful.
I think what you find is that when you're direct with people, it's not like they are sad. I think they appreciate the candor.
Well, thank you for saying so. And because most of us come up with bad excuses, and then we have to remember what we lied about last time, and we paint ourselves into a corner.
Yeah, you remember the book Power versus Force?
Yes,
We
exactly.
talked about it. You have to choose truth over diplomacy. And I think when you choose truth over diplomacy and you play that long game, you come out ahead. So it's a disservice if I am not candid. I try to be as candid while not trying to be abrasive.
But shifting gears here a bit, I want to talk about bridge. I know that was no pun intended, but a weird bridge to my next question. So you teamed up with Dr. Jack Skeen. We talked about that. This was in 1999-ish, and he gave you this owner's manual, and you learned that you like to play games. You like single play games in particular. And so with that in mind, I've learned that you're also really into playing bridge, and I can't help but ask you, I don't know if this is an either or, but why are you so much into bridge and not a game like Hold'em poker?
Yeah, I mean, I think, it's funny. Warren Buffett, he's a very good bridge player. He plays with a former world champion as his partner. A few years back, maybe it was maybe a decade or more, maybe 2 decades ago, he was invited to some poker tournament. And he actually, studied up a bit, tried to understand how to play poker. Poker is a very different game. And he did very terribly in poker. I I have played poker a few times, and I've never really gotten enough into the game to study it in depth. I mean, you can. It's also a game of probabilities and things, and you would know what to do better if you had a lay of the, what cards are left and what's going on and all of that. But the thing is, poker has elements of luck and elements of skill. Clearly, the elements of skill are very significant because we do end up with some world champions who have a repetitive streak of getting to the last final table and so on. So there is, what I'm saying, skill is significant, but there is clearly a luck element in poker. And bridge has zero luck element. It's purely a skill-based game. And so that has more appeal to me. It's also I think um, difficult to um, play poker without some money at stake, right? It's kind of intertwined with the money. Now, when I used to play bridge with Charlie, that was social bridge. We played for money, it was small stakes, But if I lost $100 or $150, Charlie was very delighted to collect that from me. Okay, he was like truly like twinkle in his eye. Mohnish, it's 125 coming to me, And likewise, when I took money from Charlie, there was some very special about that, right? So the small stakes worked with social bridge, and it was okay. I'm okay with social bridge, but I really enjoy duplicate bridge. Duplicate bridge is the one which is purely skill based. There's really no money in the picture. We do it for points. Points really have no value other than psychological value, and that's fine. So I think we try on different gloves, and some gloves fit well and work, and some gloves don't fit well and don't work. I've played poker dozens and dozens of times, right? With many times in social situations, with very good friends and all of that. It just never gotten to the point that I wanted to do it all the time. Bridge, I'm playing at least, 4 to 6 hours a week of bridge. And Warren is playing even more than that. I think Warren is probably playing more than 10, 15 hours a week of bridge.
That's interesting. I went to a boarding school where you could choose Brits as an elective, and it was a great experience. You go there, you go to a tournament, and there was someone like with oxygen tanks, and you kind of think I got them, but then you just wipe the floor with you because they're so much better than you, and you're like, yeah. So it definitely makes you humble. But it's kind of interesting because I'm not saying I was ever a good bridge player. Perhaps I was slightly better poker player. But I think in terms of investing, poker has been helpful because you really learn how to control your emotions and to lose money, which I would say you probably don't do to the same extent in bridge, or at least not the type of bridge that I've been playing. And so it was very interesting to hear your take on how you just saw the two games, and bridge was just perhaps just more fun, and you didn't see it as a segue into investing by any means. So thank you for sharing, Manish.
Well, I think bridge is more directly tied to probabilities because there's no luck element. In investing also, there's really, I mean, luck may come into play in the sense that you may, accidentally end up with a great manager or something that you didn't understand at the outset. But the probabilities dominate, right? We try to ascribe probabilities to different things, so it kind of works okay.
So I'm going to take the liberty here and define a principle as something that's timeless and something that's similar across all cultures. If we use that definition, which principles do you live by, and why do you live by those principles?
Well, I mean, I think that there are some principles that are very front and center, right? I mean, and a lot of these become intertwined with mental models. So, for example, like we talked about power versus force and the importance of candor, right? So, I think that becomes a very core principle. Um, I think integrity, honesty, trust. Basically, again, these are attributes that will make the world your oyster. So it's a huge advantage to be trustable. And being trustable is a long game. It's an infinite game. It doesn't happen overnight. And you have to be willing to play that long game to build the trust. We had a high school intern at Pabrai Funds who would help us with, the mailings and different things, sending books to Stig and so on. What my assistant told me is that he would say, I'm going to be there on Tuesday at 3 o'clock, to work on stuff. And then he would not show up, right? Or he'd say, I'm coming Wednesday at this time, wouldn't show up. Now, she said, when he does show up, his performance is exceptional. But when he says he's going to show up, it's a 60% probability that he's actually going to show up. So I told her, I never talked to him, but I told her, look, Munger says that one of the most important traits is reliability, right? And I said that unfortunately, this young person doesn't recognize how important it is to be reliable. He can easily tell us, I'm not available this week. We'd be fine with it. But why lead someone on, right? And Charlie says that one of the best educational institutes on the planet is McDonald's, because McDonald's hires very young people. And one of the most important traits they learn at McDonald's is reliability. Now, they're not like us in the sense that you tell your boss at McDonald's you're going to show up at 3 p.m. and you don't show up. By the second or third time you do that, you don't have a job. Even the second time you do that, you won't have a job, right? And so the young people who work there get that work ethic, which is great. And I think that's why Charlie thinks that they do such a great job. So I think that these are, for the most part, the principles that carry the most weight are the most basic principles. Trust, reliability, integrity, honesty, truthfulness, hard work, diligence, fairness. People like to be treated fairly. If there are people working for you, they really want to see that things are fair. And so these are just basic principles that you have to live by. If you don't do those, then in the end, you'll be the loser.
Hey guys, it's Clay Fink here, host of We Study Billionaires. Today, I wanted to tell you about our show sponsor, Vacasa. The dream of owning a vacation home can be daunting. From finding the best guests, to the maintenance, to organizing the cleaners after every guest stay. With Vacasa, they make that dream into a reality. As a full-service vacation home management company with vacation homes in key destinations across the US, they know how to make owning a vacation home easy and profitable. On top of proactive property maintenance visits by professional local teams, a data-driven booking platform, and around-the-clock support, homeowners earn on average 20% more revenue from their vacation homes. Vacasa makes vacation home ownership easy. If you're looking to make more from your vacation homes by doing less, partner with Vacasa at vacasa.com. That's vacasa.com.
So, why do so few people live by those seemingly simple, but perhaps not easy rules?
Because the payoffs don't come immediately. So trust is something that pays off after decades, right? Just think about Warren and Charlie, how old were they when the world started to trust them, right? I mean, even outside the US, he wasn't very well known. Buffett wasn't very well known till maybe 15 years ago, 20 years ago. And so it's a lifetime of doing something that eventually leads to that type of an outcome. And so a lot of people are looking for shortcuts, right? They don't want to um, play the long game. I mean, a used car dealer is just focused on, hey, let me take this sucker for the maximum I can, and who cares about the next one? He's not going to buy another car for so many years, and he might never ever show up here again, right? So it's a very transactional, one-off relationship. But over time, you end up with the shallows in life, and people cannot see that because, like I said, you have to connect the dots. And this type of like reliability and trustworthiness really gets built over a long period of time. It's not overnight. You don't actually get to see the results of that relatively quickly. That's why people don't do it, because they want to see X equals Y. If I do X, then Y happens. But here, there is no XY relationship that's visible until a long time later.
And that's why some companies that should be buying back shares are not doing it. But that's sort of like a different different discussion, I guess.
Yeah, and like I said, even the best companies, they play the long game, right?
Mm.
I mean, we are seeing right now, for example, at Boeing, a situation where Boeing used to be an engineer-led company, and after they merged with McDonnell Douglas, the bean counters took over, and the bean counters focused on, hey, can we increase earnings 10-15% a year? And they must be fat we can cut. And so, for example, if you look at something like the 737 aircraft, which is their workhorse, basically there was a demand for 737s with more capacity. And really, quite frankly, that airplane with that fuselage cannot grow infinitely, because also to have more capacity, you need bigger engines. What they did, they put these massive engines on the old 737 fuselage. If you really look at like the Max, the engines are huge. And then they extended the fuselage. And so they basically told the engineering groups that, yes, we know you are telling us that we should go to square one and design a new airplane. But that's like, 8 years, 10 years, and several $1 billion. Can we just modify this? Right. And so they forced the modifications. And then we had the two crashes. The plane is still a kludge. You know what I'm saying? The Max is a bean counter. That's what happens when you have bean counters running engineering. Okay. So, they started not playing the long game, right? They played the short game. And now there's a come to Jesus at Boeing. And it's terrible because, quite frankly, we only have two aircraft manufacturers in the world. We need Boeing. We need Boeing to be a high quality, great engineer driven company, which builds great airplanes and plays the long game. People are very willing to let Boeing make a lot of money. No problem. But please play the long game. So we see even businesses like Boeing, which are such great businesses, suddenly decide, let's cut corners.
Terrible. Yeah. Um, Manish, I want to read books the way that you do. And what I mean by that, I remember we had a conversation a few years back, and you said that if you don't find a book interesting, you just like a stock, if it's like too much debt, whatever, like you just stop reading it. And I'm practicing that. It's surprisingly difficult for me not to read a book from A to Z, but I am practicing that. I wanted to ask a bit into your reading habits. Do you take notes in your books, or do you put them into a document, or how do you process the information you read from books?
I want to give you some information, Stig, that I have never given in any interview ever.
I'm intrigued.
So basically, since I was in kindergarten, all the way to finishing my undergrad and even, taking grad classes and so on, I never ever took notes. In any classroom, when a professor or teacher was teaching, everyone around me is taking notes. I'm just focused on listening to the person or watching what's going on. I never ever took notes. And what I would do is, okay, when there's a test that's going to happen or whatever, I'd go to the textbook and see, okay, we're going to have chapter 3 and chapter 6 on the test. I'd read up on those and, we'd get ready for the test, right? Sometimes what would happen is the professor's not teaching from the book at all. Okay. And I'm saying, oh, what he talked about, I'm like screwed. Okay. I have no notes. And now there's a test. And I'm like scrambling, trying to figure out, I call my friends, whatever, and say, hey, what are we supposed to prepare here? And what are we supposed to read here? And whatever. But I never changed that habit. Somehow that habit has stayed with me. And I graduated near the top of my class in my undergrad, and I did well. And so I made it to 60 years in life without taking notes. And even when I'm reading books, I mean, if I didn't take notes in class, I'm not going to take notes when I'm reading a book. It's not going to happen, Stig. So I've never taken any notes anywhere. And I want to also touch on two different data points that you brought up. So Bill Gates has a situation which is like Stig. If he starts a book, he has to finish it. Has to. He's obsessive compulsive. Okay. Charlie is not like that, or was not like that at all. And I remember I was talking to Tracy Britt, and Tracy said that, Warren studied Lehman Brothers during the crisis. I think he was looking at whether he should make an investment there or not, etc. And so he read their annual reports and different things. And she said, I got the hard pages that he read, and I looked through all the pages for his notes. And she said there was almost nothing. There were like a couple of places where there was something underlined or something, but there would have been like less than 5 words of notes in all those 10Ks that he read for Lehman Brothers. So there was really no record. She said, I was trying to figure out how he's thinking about it, right? And basically there was no record. Whatever he was thinking was in his head, and nothing was really kind of put down on paper. And I think one time Berkshire did some acquisition, and the SEC was questioning. There was some insider stuff. They were questioning some stuff. So they sent Berkshire a request saying, we want to see all the staff notes for this acquisition. And Munger sent them a response which said, dear sir, there are no staff. There is no staff, and there are no notes. Warm regards. Okay. And that was the end of the thing.
That's fantastic.
So basically, I think I'm sorry to disappoint you, but I'm not a note taker.
Interesting. Well, thank you for sharing. That was insightful. So, Mohnish, on this train ride that we are on together here, I am still going to ask you a bit investing related, but they're going to be a little bit different than perhaps what you're used to. So, no secret that you have a great track record, but you've been handily beating the S&P 500 for more than 2 decades now. I'm teeing myself up to ask you, and I don't know if this is going to come across rude or perhaps even the opposite. If you started Pabrai funds over 1,000 times, do you think your current track record would be better or worse than what it is now if we subtract good and bad luck? And please feel free to challenge that premise and say that it's already been evened out, good and bad luck for now.
Well, so first of all, I should just preface and say that I started investing in the 94, 95 time frame. From then till about 2018, if you look at any period, looking back forward till 2018, 1 year, 5 years, 10 years, life, whatever, I beat the S&P, all the different funds I manage. We are behind the S&P from 2018 till now in most of the funds. But we've also turned a corner, I think, from 2020 onwards, we are again beating the S&P. So um, we have to go a little bit longer period, few more years, and then I think we'll again be back to beating it over all periods. It's a difficult question to answer. I mean, if you kind of run simulations, because also what has happened over the years is that I've learned a few things along the way, right? And I've changed some approaches along the way. And so I really don't know what the answer would be. I would think that in most of those scenarios, we should do well. We should end up with a decent record. But it's hard to say, I think until we actually, because, at the end of the day, it's the individual names and it's a sliver of those names that lead to the outcomes.
Yeah, and that's why I can't help but ask that question. In in a game like poker, if you play enough hands and hundreds of thousands of hands, you can sort of like take away
Yeah, the luck element goes away.
the luck element goes away. But then, if I look at your as an investor, I get the letters from you, and I can see different track records for the three funds that you have, and they were more or less started at the same time, not exactly, but roughly, and the results are quite different, and you were presumably as good an investor whenever you invest for those three funds. And for whatever reason, for example, Ray says is a bigger position in one of your funds than the other funds, which I'm personally very, very happy about. So you do get different results, which is why I wanted to ask you about, like, what if we ran it 1,000 times? And I don't even know how to ask that question the best possible way, because whenever you said you saw the .com bubble, but that was also because you had made some investments, some private investments. So you sort of like saw what was coming. And I'm like, is that bad luck or is that good luck that you actually knew that going into it? Can we even put that into a simulation? Can we even do the same time period? Like, how do you think about luck whenever it comes to your own track record?
Well, it was a huge advantage for Pabrai funds that I had a front row seat on. I basically could see what was going to happen maybe 3 months ahead of what others could see. Not a lot, but 3-4 months. And so I completely sidestepped the bubble and did really well. And so part of that, I think, is luck. Just the experience I had or the what I observed. We did not have the same situation in the financial crisis. So when we had the financial crisis, at that time I really couldn't see it. I didn't see it ahead of time, and we paid the price. We had some investments go to zero, and we had a lot of things get marked down. So it's not perfect. Doesn't can't always have a crystal ball, uh, seeing what we're doing, and like Charlie says, we're old too soon and wise too late. Uh, I wish I had some of the insights I have now 20 or 30 years ago. that would give me a huge advantage. But it is what it is. So we just take it as a goal. I don't spend any time thinking about it the way you're suggesting. I think my focus is, okay, we have a certain reality of positions we own, assets we manage, opportunities available, and then we do the best we can with all that.
I think that's such a healthy way of looking at it. Because of Charlie, you got all these wonderful questions about stories about Charlie and how you remember him. And one of the things that you mentioned in other interviews is that he's so good at looking forward, not thinking about everything that's been in the past, which is just wonderful. So I kind of feel bad about asking you this very theoretical question, but again, I'm not here playing the greatest hits. So let's say I'm the genie coming out of this bottle here. I'm going to tell you, Mohnish, that I have an account here, and there's a 20% interest rate in perpetuity if you put money into that account. But the price is that you can never invest your own money. So you can take your own money and put in this account. You get 20% like a clockwork. And this is not this is not Bernie Madoff, any kind of thing. This is the real deal. You get 20%, but you cannot play the game of investing. Would you ever take that bet? Or not even bet, I would say. Would you ever do that knowing that you don't need the money from that 20% compounding, but you perhaps love to play the game?
Yeah, actually, that's a great question. I do very much enjoy the game, um, but that would be a very tempting offer. Um, I'd have to think about. I mean, in the sense that, I mean, basically, it's all or none, right? You're suggesting it's all or none,
Yes.
right? Yeah, all or none. I would say that I'd probably take it and go all in on bridge.
Wonderful.
Still be playing math games. I remember there was it's really funny. There was a there's a guy who had invested in my fund a long time back, maybe more than 20 years ago. And he said that one day he had opened Barron's or something, and there was some article on Berkshire. This is going back, into the early 2000s. And he saw that the stock is like 70,000. And he said, no company, this was his thinking, he's a smart guy, okay? He says, no company on the planet is worth 70,000 per share, okay? He didn't know anything about Berkshire, nothing about Warren Buffett, and he shorted the stock, okay? Much to his detriment, okay? He met me a few years after getting burnt on that short. And then he actually said to me, in the early 80s, he said, I had noticed that the US treasuries were playing 18%, pretty close to what you said. Okay. You could have bought 30-year US treasuries in 1980 or 1981. And for 30 years, the US government would pay you 18% a year on that bet. Okay. And he said to me, Mohnish, not only did I short Berkshire, but I didn't take that bet. Okay, that 18% bet. Now, most people didn't take that bet. Okay. And then he said to me, I just want God to give me one more chance. He said, he said to me, give me one more chance of 18% US treasuries, and I will put everything in. I promise God I'll put everything in. I'll never invest in anything again. So exactly what you were saying is what this guy was saying to me, which would have been smart for him to do. And that would have been one hell of an investment. From 1980 to 2010 to get 18% compounded would have been unbelievable with no volatility.
What a story. So, Mohnish, I wanted to preface this question by saying I wanted to ask you about giving away money without talking about dasana, which I don't know if it's even a fair premise. If we're good at accumulating capital, we should probably be accumulating capital instead of spending too much time giving it away. Giving away money is very, very difficult. I mean, it's very difficult because you don't have that positive feedback loop in terms of figuring out if it's right or wrong. And I should make all kinds of disclaimers that you probably figured it out with Daskana. So this is like a weird question, probably. I'm going to ask it anyway. Assuming that you're better at accumulating money than giving money away, and you want to help society, but you take so much more joy in giving money away than accumulating more capital whenever you are financial independent, whatever you want to call it. How would you think about how to allocate your time?
Well, I actually did not want to spend time giving money away. I knew that I didn't believe in large inheritances. And if you don't believe in large inheritances, then you're going to end up with a lot of money. Then you only have one choice, which is to give it away. There's nothing else you can do. And so my focus in like 2006, 2007, when I was trying to figure this out, was to find a nonprofit that I could just write checks to. I didn't actually want to do the work. It's very painful to do the work. The first few years at Dakshina took an incredible amount of time and effort to get it off the ground. There were a lot of challenges in the early days. So I was forced to do it because the model I wanted to follow, the guy who had that model didn't want to scale. So I said, okay, then we just clone it because we have no other choice. Today, I actually know of one or two nonprofits that do a really good job. And so if I were facing that situation today, I would look to them, as assuming they could absorb the amounts I was looking at. Then I think that would be great. So my natural inclination was to not be building a Dakshina or anything like that. Now, in hindsight, what has happened is Dakshina blew away the most optimistic goals I had for it by quite a distance. It just really, the ball got hit way out of the park. And I never expected that. I actually expected to fail at doing something in India when I'm not there, etc. So Dakshina has enriched my life in a way that I really could not have forecast. It was definitely in 2007 when I was starting it, none of these things were on the radar. None of these things were even possibilities. It went beyond those possibilities. It's such an outlier. And so now when I look back, I say, wow, Mohnish, you are really lucky because you actually ended up with something like Dakshina. And the people I met as a result, the scholars who become such good friends, and all of this stuff that's happening. And I know that the real miracles at Dakshina will come about in the next few decades. And I'm hoping that I have a nice long life because there is so much joy in all of those stories and miracles that are happening every day. So it's been really, you can just say that, my middle name is Forrest Gump. Okay. I just, stumbled into this, stumbled into a lot of things. So just like stumbled into a friendship with Charlie and playing bridge with him and taking money off him and all that. And stumbled into some relationship with Warren. So there's been so much stumbling. But also I would say that, you take some actions so that then luck can do its part. If you don't take the actions, luck can't do its part, right? So, from a very selfless point of view, I wanted to just thank Warren Buffett for all the things I learned from him, right? So, the lunch I bid for, though there was no ulterior motive. The only motivation was to see him eye to eye and say, thank you so much, Warren. And I was giving I was willing to give Warren at that time up to $2 million for that lunch. We got it for much less. But I felt like giving up 2 or 3% of my net worth at that time was very worthwhile in terms of a low tuition bill, right? Now, that was all the thought that was paid. It added so many dimensions to my life. The friendship with Charlie, it was not buy one, get one free. It was buy one, get infinite lunches free. This is great. What I've learned is I think the universe, if you are a good person, working hard, putting yourself in the right place, doing the right actions, the universe conspires to help you in very magical ways. I truly believe that. And I think as long as you are playing the long game, playing the infinite game, and trying to do the right thing, things have a way of working out in a wonderful way.
So I wanted to tie a few things together here on that note, Manish. So in chapter 6 of William Green's wonderful book, Richer, Wiser, Happier, I should mention chapter 1 might be even better because that's with with you, Manish. But chapter 6, that's with Nick and Zach, and they talk about this thing about handing someone a loaded gun, and then you can only treat the other person really, really well. And I found that to be such a wonderful framework. And so I start gifting William's book away to different people. And one of the things and this might just be my own bias or the circles I run in, but the wealthier and more value investing focused people I spoke with, they were like, it makes a lot of sense. I also have friends in third world countries, and they said to me that it was the stupidest thing I've ever said. And I've said a lot of stupid things. And they basically came back to me and said, well, it's wonderful and beautiful to have all of these principles, whatever you will call it, if you can afford to have them. And Grant has this wonderful framework of givers, takers, and matchers, which a lot of our listeners might be familiar with. And I heard you talk about Daskana and the idea behind you're not going to tell anyone like give 10% or 5% of whatever you make by getting help from Daskana in terms of paying back to the school and help others. You say give, and if you're a giver, beautiful things can come back to you. And so I've been trying in a very small scale to set up a Daskana foundation, and whenever I do, I come up with these beautiful principles, and I read your annual letters from Daskana, and it all sounds good. And people basically tell me it's a very bad way of running any kind of nonprofit. How would you give a rebuttal to that? Because it clearly it worked for you, Manish.
I would say that, like Charlie said, and we talked about McDonald's and reliability. I think that if you want to get ahead in life, do well in life, and have a disproportional advantage in life, you want to be a giver. You want to be reliable. And being a giver doesn't require you to be wealthy. We have so many poor scholars and students at Dakshina who give their time to us. They volunteer for us. They don't have anything else to give but their time. And they're very excited to give their time. And so what I'm saying is you don't need to be wealthy to be a giver. Okay? You can give within your means. It doesn't need to be anything related to money, right? The other traits, reliability, truthfulness, integrity, high empathy, caring for people, etc. Play the long game. And in the end, the universe will conspire to help you in a manner that will blow you away. So the skeptics, I just think the skeptics don't know the way the world works. And you can see so many examples in history. It would be difficult to come up with examples of people who were very reliable, who were very honest, who were very hardworking, who had very high integrity, and did terribly in life. That'd be very difficult to come up with examples of people like that.
As we're nearing the end of our train ride here together, Manish, what a wonderful way of ending a train ride. Anything you want to add here before we round off the interview?
some of my best memories in childhood were train rides in India. And William Green and I had two wonderful train rides when he was in India with me. He was drinking from a fire hydrant. There were so many things going on. It was like, full technicolor going on. So I would just say that if you get a chance to visit India, anyone listening to the video, if you get a chance to visit India, try to take an overnight train journey. And I think you will love that experience. The Indian government has set up a number of trains, the Rajdhani Express, the Durontos, and these go all over the country. And you can catch a train at 7 or 8 o'clock at night, and it pulls into your destination at 10 or 11 o'clock in the morning. So you don't really lose much, and you got a free hotel stay for the night. I think that's a wonderful experience to broaden your horizons.
Fantastic. Mohnish, thank you so much for your time. It was a pleasure speaking with you, as it always is, and thank you for playing along in this probably very different interview. So thank you so much for your time.
It was my pleasure, Stig, and I look forward to seeing the edited version.
All right, fantastic.
Thank you. Bye. So the key in investing is to recognize two things. One, we're going to make a lot of mistakes. Two, this is a very forgiving business. You can be wrong even 98% of the time, still come out smelling really nice. And three, that is only going to happen if you are able to buy businesses with great economics at reasonable valuations and then hang on to them forever. So when they get fully priced, they don't get sold. When they get overpriced, they don't get sold.